Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny.
We're going to look at two possible trades that we're looking at. One is shorting Tesla. Oh, dear God. Terrifying. Hold on to your hats.
Two Super Guys Trade Stocks.
All right. So,
Yeah.
I just wanted to show how absurd it is. This is after, right? This is after this last drop, okay? After earnings. They're still at a 523 billion market cap. Toyota, next one, 183 billion. And then it goes drastically down from there. Let me move your face. Like Ford is down there, 47. General Motors, 46.
Ford doesn't even count anymore.
Tesla sold 1.3 million cars, and their operating profit for quarter four was 14.78, which has been slowly decreasing ever so, actually kind of fast. I was going to say slow, but kind of fast.
Yeah, I mean, rapidly eroding, right? They've now made how many price cuts so far this year? It's gotten even worse. You know,
5.
They're moving the price of their vehicle down, and at the same time that they're actually getting squeezed because everyone's making EVs now, so they're having to compete for raw materials. You know, it's tough. I mean, they're not in a great kind of long-term durable moat, as Warren Buffett would say. Moat? I don't know.
Right. And the logical thing to say here is, Dylan, what the hell are you talking about? Who would short Tesla, right? Because fundamentals don't matter, especially in a long, well, in a short time frame. But
Yeah.
and you're also thinking, dude, they've fallen so much, they can't possibly fall more. No, they can fall a lot more because they're still incredibly overpriced. Toyota's sells 10.5 million cars a year with an operating margin of 7%, and they're less than half, like significantly less than half.
Yeah.
Here is just 2020 and up, right? You can see they were chilling like $420. Now, they were a lot more than that, but they've split like multiple times. I think it was 2000, but this graph takes in the split. This is a weekly chart. So here's what I'm proposing, okay? See this 200 moving average, this nice blue line for the weekly chart?
That it's like hanging on to for dear life.
It looks like it lost it. It actually set a new low. We had a lower high, lower low scenario over the last 2 months, okay? But let's take a little bit of a closer look. All right. Now this gray line is the 100 moving average. Okay. You can see it's quite well respected. There's about 8 days. Can you see my mouse?
Yeah, I can.
Yeah. About 8 days, bounces off it, finally loses it. And this is almost to the penny when you zoom in here, right? Because it's kind of a self-fulfilling prophecy. People are looking at these averages and are like, oh, well, we got a shorter, go long here. Bounces here, Buddha, Buddha, boom, slips, and then finally breaks up. Once again, perfect bounce, and then it gaps down. This is the scariest thing because you had no chance, right? It just opened the next day and you lose. Now, we came back up. We went up pretty easily, dropped below it, and now we have opened after earnings below the 100 moving average. All right?
Okay.
So if we're talking low-risk trade, which is a weird thing to say with Tesla, right?
Exactly what I was thinking. I'm like, I can't put those two things in the same sentence together, but sure.
You don't want to go crazy here. I want to see what happens Monday, because there's about 15% of the SPY reporting earnings this week. Google, Amazon, Meta, Apple next week. If it's bad earnings and you have a weak stock during a market fall, that's the stock that falls the most, right? We previously saw this at $80. Let me go back. See?
Yeah.
$80, or sorry, about $900. Sorry. So we're at about 165 right now. You could do a put option. Give yourself about a $6-ish to this 9 EMA here on the daily. And if it goes above it, just dip out. All right? You won't lose more than 10% because the volatility of this stock is insane, so it's priced in. The options are quite expensive because of it. But as long as you adhere to a stop loss, it's not a bad trade. My problem is adhering to the stop loss, right? That's my biggest weakness as a trader. Fully admit it, right?
Yeah. We noticed when you held onto your puts through like every single thing that you said you would close them at.
Still holding. Here's the next trade. All right, I want your input on this. Now, the Fed rate hikes, we've talked about TLT before. It's the only reason why I make money in the stock market, essentially, is that. And Nicola is I just short the tits out of them. But now it's looking like it's time to go long. All right, because bonds have been battered and yields are incredibly high, and because they have an opposite relationship, and the Fed has to at some point start decreasing. I'm not saying now. This is a long-term trade. This is not a couple-week thing. But they got to start slowing down. Look at these rate hikes. This is the weekly TLT. Okay, this goes back to 2012. Look how often we were below $109.
Not very much.
Not very much. Now, devil's advocate, if you back this up, it's below it like the whole time. It's a little bit different because it was the financial crisis and we had a bunch of inflation after that, so it's not really accurate. But we are chilling at about 104 right now. I don't know why, but I would think technical analysis would not really work on bonds, but it kind of does a little bit. Like you can actually see, like it bounces off this white line a lot, but you can see we're making higher lows each time. Boom. Uh-oh.
Yeah. Look at the change in slope of the moving averages too. They're starting to flatten out, and eventually it's going to cross over, and they're going to become a level of support. It looks like we're very close to that.
We're in that channel. So full disclosure, I have 100 shares of this I bought over the last week. My average is, I think it's like 105 and 2 cents or something, 105 and 8 cents. Gonna buy more because it's expensive. But I just, unless you can talk me out of it theoretically, we have to stop raising rates, right? And even if we do, and I mean stop over the long term, we can't just go up forever because then we're screwed. So I do think we're going to have another rate hike, to be clear. I think you probably have a 2 to 3 month area where you could load up on this. But I would not, going above 109 seems risky.
Yeah, I like it. Like I think you may be still too soon, but like timing this thing out is probably a fool's errand, if you will. I don't think you're going to be in a bad position by owning that 100 shares or so of TLT at this point. And that, I think there is going to be opportunity for a new bull trend. So someone commented on one last time we mentioned this, saying that we were a little bit too late to that party, but I think there's still plenty of time to go. And from like a technical standpoint, it looks like we're almost getting to the point where technicals are going to be on your side as well.
Yeah, that person I don't think watched the video. I replied. He said it was too late to go short. I was like,
oh,
yeah, we were short for like 9 months. So
2 years ago, something like that. Yeah, exactly. This is me. I'm an idiot. The reason why we named this channel this, right, is that I'm still doing the whole theta gang thing. But so far this year, I've actually doing pretty well. I'm up 16.9% year to date as of close on Friday. Outperforming the SPY by a fair margin there. I have been selling these Oxy's cash puts. Talked about it. I actually sold one at 55 strike, and then I rolled that one up and sold it at 60 strike and expired worthless just this past Friday. I had a covered call on my Baba shares, which expired worthless, most recent one. And then also, this was kind of interesting to me. The first time this has ever happened to me. So I had sold the 165 Apple covered call that expired this past Friday. It actually ended at 165.02, meaning that there was actually value there. $2, probably not worth it for them, but they didn't exercise it. This is the first time that's ever happened to me where an option has expired in the money, but it was unexercised.
I don't think I've ever seen that happen, actually. Really?
I mean, it makes sense, right? Because there's a transactional cost for them to remove that $2 of value. They'd have to come to the table with $16,500, so that money has a value.
That's I also kind of wondered, $16,000 for $2. I'll do it in a heartbeat.
Sure. Yeah, I know, right? That makes a great return on your investment. But I kind of wondered. I was like, that's weird. Is that the market saying that this week is going to be bad because they would have to theoretically sell those Apple shares at the open for the exact price of 165.02 in order to make back that $2. So I kind of wondered.
Your Oxy puts, what time duration are you throwing on those? 2 weeks?
So when when I'm selling theta, I want to be 30 to 45 days out generally. So sometimes in a
Oh,
month. I'm going to put that trade back on for as of Monday here. And I'm also going to sell, this is a little aggressive. I'm going to sell the 165 Apple call expiring in the monthly expiration in May for $5 a share. Yeah.
I think that's a
Basically,
good
it's
call.
not going to be above 165.
I think so. If you look at our other video, how we're in a channel right now, I think that might be decent. Yeah.
Yeah. Stupid guy just doing stupid things here.
All
Catch you
right,
guys in the
guys.
next one.
Tell us what you think. Have a good one.